Have you ever been in a trade, the trade hits your stop loss, and then you go review this trade and you realize price never hit your stop at all? And as a matter of fact, it's reversing into your direction, but the broker closed you out. What is going on? Well, it's all about spreads. And today in this video, you'll learn exactly what spreads are and how they affect us as traders in the Forex market. Let's go. All right, guys, welcome back to the channel. Today we're going to talk all about spreads. So you've probably heard the term before, but maybe you're not exactly sure how it works when we talk about trading in the FX market. Now, first and foremost, what are spreads? So the spread is the difference between the bid price, usually known as the sell price, and the ask price, which is usually known as the buy price. You can typically see this if you open up your MetaTrader 4 or MetaTrader 5 and you try to place a trade. There are two prices that present themselves, and usually they're slightly different. So in today's example, we're going to look at the British pound versus the Australian dollar. Okay, so now in this example, if we look on the upper left hand corner and we are on trading view here, there are two prices that present themselves. So over here in the red box, we have the bid price, or in other words, the sell price. And over here in the blue box, we have the ask price, which in other words is the buy price. Now, the difference between these two is what we call the spread, okay? And the spread is going up and down just as the numbers are going up and down. But what the spread is, and the reason for the spread, it's the way the broker gets paid pretty much. So the broker is going to get paid for all your trades, okay? So that's going to be dependent on the spread price at the time at which you take the trade, which means right now, for instance, we are going back and forth between 1.8 to about 2.2. So let's just say at the time you take your buy or your sell, the spread price is 2 pips. What that means is the minute I place a trade, I'm starting automatically in the red, as a lot of you are used to if you're taking a trade, and I owe the broker 2 pips. If the spread is 2 pips when I take the trade, I owe that broker 2 pips. So I start in the red behind 2 pips. So that means if I'm especially a scalper and I'm trying to go for 10 pips, in reality, if the spread is 2 pips, then my take profit should really be around 12 pips, because I need to account for the spread in order for me to take the full 10 pips from that trade. And this works for many other pairs. However, depending on the pair, the spreads could be higher or lower. Typically, the major Forex pairs are going to have lower spreads than a lot of the other pairs. However, when we talk about commodities, indices, even crypto, those volatile pairs are going to have much higher spreads. Now, typically for a swing trader, a spread may not be much of an issue, but for a scalper, there are certain situations they can fall into that a spread really matters at the time at which they want to place that trade. So let's say I'm trading GBP AUD. And I want to take a sell in this little pullback over here in this area. I'm a scalper and I just want to go for 10 pips. So what's usually going to happen is once I enter my trade, I can set my TP at 10 pips, that's fine. But if I'm not paying attention to the spread, when my trade takes profit, I may actually see that I've received less profit than I anticipated. You have to actually calculate the spread into the amount of pips that you wish to collect in any trade. So if the spread is 2 pips and my take profit is 10 pips, then I'm going to receive only 8 pips of profit unless I make my profit 12 pips. So I have a decision to make. Either I'm going to let the trade just go for 10 pips and my TP is going to stay at 10 pips and I'll collect the 8 pips as my profit, or I go for 12 pips knowing that I'll get a full 10 pips in profit. Although this may not matter on a smaller account, on a bigger account, 2 pips could mean the world of a difference. Just put it this way, if I'm taking 50 lots on a trade and my spread is 2 pips, then that 2 pips is $1,000. That's $1,000 difference there. Whereas if I'm taking half a lot, those 2 pips are worth $10. So be sure you're aware of what the spread is before you enter any trade. Now, there are certain situations where spreads could be much higher than usual, which are typically during news events and the times at which the currency pairs you're trading are not in session. Now, in situations where your trade hits your stop loss, the spread can also play a major role as well. So what can happen is, if in another trade, let's say I took my buy from over here, and then let's say I set my stop loss at 1.78672. Okay, so right over here. Now, although price did not get to this price, 1.78672, if we think about the spread, that 2 pip spread, then price is technically going to take you out at 1.78692. And that is right over here, just about, okay? So as you can see, price did hit this area, although it did not hit what you placed for your stop loss. Because of a 2-pip spread, you may still get stopped out of this trade, and you may not understand what is going on if you have no knowledge on how spreads work, okay? So this is why you need to be very aware of what the spreads are when you are taking the trade. Spreads can typically be higher during news events, or even times at which the pairs you're trading are not in session at the moment. So for example, Euro USD may have a higher spread if we are not in New York session or neither in London session as well. You want to be very, very cautious that you know the spread at which a pair is trading at before you take the trade, and then you can determine where your stops are going to be and where your take profits are going to be according to the spread at which that you took the trade. So remember again, the spread is the difference between the bid price and the ask price. All currency pairs are going to have a spread because ultimately your broker is going to get paid for the trade that you're going to place, and you need to make sure that you're fully aware of what the spread is in a pair that you're trading before you take the trade. I hope you guys gained value in this video. If you did, please like, share, and subscribe. I'd really, really appreciate it. And until next time, guys, Jordan the Maestro, take care.